And to our first conversation now, it's earnings season, and major companies are rolling out their first quarter earnings for 2023. Today, we're focusing on BUA Foods as a leading food manufacturing company. Let's take a look at the numbers now. We see assets rose 5% year on year, 649 billion naira, and revenue that rose 60% year on year. Gross profit at 56.5 billion, that's up 100% year on year. We see profit before tax 85% up year on year. Well, joining me now is Engineer Ayodele BUA, Managing Director of BUA Foods PLC, joining me via Zoom. Great to have you on the show.
Thank you, Daddy. Good morning. Thanks for having me on your show this morning.
So looking at the numbers now, I see the top line quite impressive there. Revenue is up 60% year on year. What were the key drivers of the top line and bottom line figures?
So, yeah, you're right. Just looking at the numbers, all of these have come largely from the volume growth of 18% on our aggregated product offering. Yes, like you did roll out on the highlights, top line grew 60.2% to 44.3 billion. And, of course, that lands us into the profit after tax, also delivering 77% growth of to 40.5 billion as it were year on year. Well, that's not to mention the earning per share at 77% growth at 2.25 naira. In terms of levers, the business have largely focused on its expansion drives, which is one of the strategic core initiatives that I would call a big bet for us as a business. And this market expansion is largely focused on local markets as well as our sub-regional markets. And we've seen the sub-regional market actually contributing to up to 30% of our total business as it were. And aside from that, also is the product mix, pricing adjustment that we need to take in order to balance and the shocks of input costs, as it were. And of course, we continue to keep very strong focus on other overhead costs and also improving our internal efficiencies, more or less to sustain the line, to also continue to sustain our position in terms of ambition to deliver food security in Africa. By and large, we are happy with the result that we are equally proudly sustaining our position as the most profitable food business in our sector, as it were. Thank you.
And looking at the numbers now, see cost of sales, a big jump there from 28 billion to 87 billion naira. Operating expenses also grew about threefold. That's quite a big move up there. What drove that too?
Okay, yeah. So as you know, generally the operating environment globally and locally has been very disruptive. This has become an unending situation, and then of course we continue to see headwind manifestations on a day-to-day basis, or if you like call it on a regular basis, which businesses have to face. Of course, for us, global issues impact a lot on input costs. However, if you bring that down to the local environment, and specifically in quarter one, we've seen disruptions highlighted with the CBN cash redesign policy, as it were, which largely impacted secondary distributions, as it were. We also see, of course, the rising inflation trends, especially fruits, which at this point in time, I think is climax as 24.4%, as it were. Disruptions that we have also seen in terms of the general elections, which also primarily affects our uptime, also gave a very big impact in terms of our supply chain activities. So all of these costs are actually pulled together in that space. However, for us as a business, we continue to leverage our unique strategic model as an aggregate business in food across all our business divisions. Obviously, we did spend more in our selling and distribution as part of the mitigation steps to basically catch up, and also for us to be able to deliver to balance the greater opportunity of a higher top line and a higher bottom line, as it were. And so that's why it's a balancing game, more or less, for us, putting more investment to mitigate some of the headwinds, and that's why you see those costs there. But by and large, we're very proud about the numbers that have come up, and also to highlight also generally that the supply part of the business also, which also had direct impact. We had to, of course, continue to also leverage our delivery hedges as it were.
And you did mention inflation, and central bankers globally have been trying to tame inflation since 2022. We've seen global central bankers raise rates. Right here in Nigeria, the CBN has raised rates. MPR is really high right now. How are you managing rising costs of finance?
Okay, so as it was, okay, so finance cost is one of the headwinds that actually all businesses need to grapple with. If you look at it also, FX, as it were, it's a function of availability and time value of when it is there, and of course, what is the rate. For us, we keep balancing on the hedging possibility. Also, sourcing from all dispositions from the central bank, as well as also from the parallel market or the earning window, as it were. So whatever we can pull together, and also to take appropriate timing decisions in order for us to hedge in terms of cost, and also to manage our output costs as it were. So of course, inflations are there. We keep balancing our business to deliver, to keep our focus on getting good numbers out there as well. At the same time, trying to make our customers and consumers happy, as it were. We do as much as we can also to contain the costs, so that we do not pass 100% all costs to our consumers and, of course, to our customers, as it were. And that's one very key, very critical, unique differentiating factor for our business as it stands today.
Yeah, definitely inflation is a very big headwind right now, and passing on those prices will also stoke inflation going forward. But talk to me about the businesses you run at this time. I know you have a sugar industry, rice milling facility, and edible oil plants. Break down the performance of your business segment.
Okay, thanks, Lady. So BUA Foods, as put together, it's an integrated 5 business divisions. Of course, like you did call out, it's comprised of sugar, flour, pasta, rice, and edible oil, as it were. Those 5 businesses, at this point in time, in Q1, we have 4 of them that are actively generating revenue into the stream. We are very excited with the performance of the 4 segments, and of course, the latest on the block, which is the rice mill, which also I will speak about. In terms of specific segment performance, sugar, as it were, grew 25%. Of course, this is majorly driven also by our export market contributions, which, like I did mention earlier, has also given us a 30% overall contribution to total business. Our flour business also grew 58% to 31.3 billion. Largely driven by our commitment, our delivery to commitment in terms of expanding our production platform. We added additional 800 metric tons plants in our Port Harcourt factory. That's already commercialized in Q1, and the effect of that is what we are seeing in terms of growth. We obviously will see more of that as the year rolls down. The pasta segment also grew 22% to 19.4 billion, as it were. And of course, like I did mention, we're getting the rice business also commercialized towards the end of Q1, and that also contributed marginally in terms of revenue. So we're seeing all across the segment an aggregate volume growth of double digits, which stands at 18%, as it were. Over and above that, as we commercialize largely the rice in the end of the quarter, as I did mention, with marginal revenue contributions, we believe that going forward, this will scale up. We remain very happy and excited, and also proudly to say that we stand as the only listed rice producing company on the Nigerian exchange, and of course in our sector, as it were.
I'm sure shareholders must be quite excited at this time with your listing price. But bring us in on your expansion plans going forward.
Okay, so going forward, as we settle down commercialization on the flour, we will be completing our pasta division expansions, which is actually coming with 100% capacity increase. As it were, again, one of our key strategies is expanding capacity ahead of demand, which is basically to fulfill demand, as it were, because we believe that demands continue to be there as populations continue to rise. We completed the upgrade of a rice division, as I did mention. And then also, we will continue to focus on upscaling our rice business, which have just recently kicked off in Kano in our rice mill. Our intention is to also add additional mills across the across the country in several locations to further increase capacity, and also to support the government effort in terms of promoting what we producing, what we consume locally, and also be able to close the gap between consumption and production, as it were, in the rice supply system. We believe also that we will continue to expand our product offering, particularly with consumer preference changing, and of course, customer demand also changing, and also with the price and inflationary issues that come. So our innovation in product offerings will continue. We will also continue to expand our market into the region through our export strategy, and largely also in terms of sourcing alternative source of local raw material, which is championed in our sugar division with the backward integration program. We will be continue to drive an accelerated effort in that space, which is under the supervision of the Nigerian Sugar Development Council, primarily to ensure that our backward integration program is on track. And as it were, it's a 20,000 hectares of land, which has potential to crush 10,000 tons of grain per day. It's one of the biggest green sites. Starts on a green slate, and we will look forward to capacity and capability to harness over 200,000 metric tons of raw sugar from the sugar plantation, as well as the refinery factories that we are setting up there, which has got over $200 million at this point in time.
And definitely, it's not an easy time to be import dependent. I know, you guys have some big export plans, especially for that sugar. I remember you did purchase some vessels, to help you with your exports of sugar. How's that looking?
Looking quite well. Very exciting to say. I will tell you, here to date, it's been an exciting inquiries moment that we have received across the sub-region as well as the continent. In fact, even beyond the continent, we receive queries on a daily basis in terms of supply. And of course, we are addressing them face by face. We believe we are well positioned to also take the benefit of the AfCFTA, the African Free Trade Continental Trade Zone area, as it were, when that also becomes very entrenched and kicked off largely on a large scale. However, that also we need some support within we hope that governments of African governments will also put together to support private businesses like us in terms of addressing or mitigating challenges with logistics, in terms of both shore and offshore interactions to be able to get products into other markets within the sub-region. So the export market, yes, you're right. The enrollment of MV Budu has actually helped our performance in the last year and is still obviously supporting us in that space. Again, like I did say, we're quite excited about inquiries into our product, not only sugar, also other products, and we look forward to continuing to expand in this space, and also, of course, to support the economy and our national development, as it were.
And definitely, the first quarter was a very tough quarter right here in Nigeria, but you were able to navigate all of that. What are you seeing for the remaining quarters of 2023?
Okay, so for the remaining quarter, if I will respond to that, and I like to take a quote quickly from recent forecast by the IMF on the Nigerian economy, as it were, forecasting growth at 3.2%, and also describing our economy as one of the most stable. This is despite rising inflation, and also in the midst of CBN efforts to also tighten monetary policies to tackle inflation. So for us, short-term to mid-term, we want to remain focused on our targets to increasingly deliver double-digit growth across our core financial and operational performance. And of course, in doing this, we will remain very steadfast in terms of our strategy, which is basically to drive revenue And we will do this by, of course, focusing on our commercialization efforts in terms of our expansion of our key production sites in rice, flour, pasta, as I did mention, the additional capacities that we have onboarded. Of course, we continue to expand our market frontiers as well, both locally and, of course, more importantly, regionally and into the African market as it. This for us is very important, it's very important for us.
All right. I guess we'll have to.
We need with consumer needs, secondary consumptions.
All right. Looks like we're having some connection issues there. I don't know if you can hear me, engineer, but.
Turn it up, and I just wanted to hand over to you.
Okay, thank you so much. Even though we missed some of the juicy details you were giving us there, the connection there quite.
Do you hear me?
Yeah, I can hear you now. I can hear you. All right, I guess we'll have to leave it there now, Engineer Ayodele BUA, Managing Director, BUA Foods PLC. Thank you so much for coming on the show. I wish you the very best going forward. All right, so we'll take a break now. When we come back, AFEX Commodities Market Update is next. Do stay with us. This is Business Morning.